Dan Wang, I want to get your take on these numbers first and foremost. 4.7% GDP growth for the second quarter. What's your overall take?
It's a reasonable number given how much the housing downturn has accelerated since April, but it's disappointing. And a lot of people had anticipated more of a positive reaction from housing stimulus, and judging by the number, it didn't work. And then when it comes to this growth, it's actually more accounting than growth because it's mostly because of the trade surplus. So net export is driving most of the growth. And it looks like the consumption weakness might last throughout the rest of the year as well.
Yeah, what do you think about that 2%? I mean, 2%, it's effectively, we could be saying 1%, and that really doesn't say a lot too. Effectively zero if all things equal. Are you surprised by how weakness has actually come in?
I'm a bit surprised about the consumption data because there were supposedly to be some program to stabilize the consumption on the local government level. Probably the replacement of new goods or the new energy, more energy-saving products, right. Replacing the old, it didn't work. Maybe the fiscal revenue was constrained in some way. So I can see that for many companies, the restructuring was actually accelerating in Q2. So that has put more constraint on the income that people can use to spend. And also the housing downturn, of course, added more negativity on consumer confidence.
There's talk of a consumption tax, some sort of overhaul that's needed that could come out of this plenum, Dan Wang. I mean, yes, local governments will certainly want that. I'm just wondering, is it the right time to be doing this at a time when consumer sentiment is still quite weak?
The timing cannot be worse if we actually see a consumer tax coming out now. But I can see that the government has to put priorities on what they want to do first. It seems that the local government finances is more of an urgent matter that need to be addressed. And in the past few months, we have seen more news about the efforts to prevent more tax evasion and some more talks about not just to jack up the consumer tax, but also value-added tax. So if that happens, it's going to be a very contractionary scene in China, not just on the consumption side, but also in investment.
That leaves us with the export numbers, and I'm sure you saw that blowout, that surplus numbers we had on Friday, $100 billion. Good thing, and do you think that continues moving forward, the export picture?
The export has been beating the market expectation for a few months now. One big driver was the higher demand from the European market. Actually, the infrastructure spending cycle in both Europe and the U.S. has been going up. A few of the major central banks also started to cut interest rates, which is good for China's export. But then for this number, we can notice this weakness and protracted weakness in import, and that suggested a weak domestic demand that's not easily to be turned around. But throughout the year, we actually think the export might hold up relatively well, with the exception of EVs, because a lot of countries are jacking up their tariffs targeting Chinese EVs.
Okay, let's bring in Cheng now, of course, to look at the broader part of the conversation here. Dan Wang, of course, stays with us because apart from the release of the credit numbers coming through, it's the first day of the third plenum. It's I think the last one we had is in 2018. And before that was, of course, in 2013. But this one, the framing of this specific third plenum is really the first time in 11 years we're getting one that might be focused on the economy. What are your expectations?
Well, certainly it's a very major meeting, and China is the second largest economy. And the Chinese leadership determined to announce its so-called Chinese-style modernization and with a new model of growth and a new model of China's development. Now, Chinese leadership may think that the number is low, but it's very much expected as the one you just announced. This is very much in line. They need to shift from previously the property development-driven growth and export-driven growth, and also in terms of a huge IPO. These are all they're on hold, all in trouble. So they wanted to emphasize science technology development and also try to reduce the barriers in domestic market, so-called the national market. But most importantly, the financial reform is also on the way. It's on the one hand, is Chinese financial de-risking with the outside world, but the other hand is try to give the local government more leverage in terms of tax and many other things. I think that for intermediate term or long term, this kind of emphasis on innovation, emphasis China's development model, which emphasizes clean energy and e-commerce, and hopefully with China's largest middle class market, China will come back to a much better footing. This is the plan of the Chinese leadership.
Yeah, but Dan Wang was just talking about external pressures when it comes to these new productive forces. If they're going to be exporting them out to the rest of the world, they're going to be hit by tariffs or potential tariffs in the EU as well as the US. I mean, how does China contend with that?
Well, this is already Chinese leader prepared for a long time. This is where the twin circulation come from when Xi Jinping announced 5 or 6 years ago. So this emphasis on domestic market does not mean that China can only develop by itself. The foreign investment, foreign engagement is a necessity, not a choice. So China will, again, enhance its outreach with Belt and Road country, especially with ASEAN country. From their perspective, Europe also desperately need China. And I think that the European views, even in EV and the other new energy, differ from US. So they will work on that. Of course, it's a big challenge.
Dan Wang, your expectations for this week, and if not this week, we also have a Politburo meeting coming up. What lens are you looking at these events through?
The biggest expectation from where I stand is more details or clarifications on the financial reform, because the Chinese banks probably are in a very serious state right now. The profit margin is squeezed. The bad loans are accumulating, mostly related with the housing market. And there were already a lot of the consolidation of smaller banks into bigger ones since last year. But still, it's hard to see how this whole thing can be resolved in the next few years without a stronger centrally backed program. And there are a lot of new regulations added to the industry as well. So it sounds like the central government would like to reduce the share of financial industry in the economy to make it more as a focused banking system supporting the real economy rather than speculation. But in this adjustment, I think the credit issuance and banks as an entity to bear more risks would be diminished, because right now what we have seen is that banks are going for the safe mode. They're heading to get more clients in like the state sector or in the emerging industry rather than focusing on the private sector or smaller businesses that are desperately in need of help.
Li Cheng, is that the big risk for China, that these Chinese banks are vanishing in some ways? Well, it's not only domestically, but also internationally. Domestic is certainly there's a huge local debt. So you will see the government policy try to reduce the local debts through the state bonds and many other measures. And this is one. The other is China certainly concerned about China's vulnerability in the international financial system. This is what Chinese call financial de-risking from Chinese perspective. But overall, they think that they will accelerate the RMB development. It's, of course, not to replace the US dollar, but at least prepare the difficult scenario. But most important things is Chinese government that does not take a very simplistic view, either market or state. They will do both visible hand and invisible hand in terms of state and market relations. This has made China's economic miracle that maintain China's social stability. They think that China is on the right track. Now, how bad is bad enough in the Chinese economy? They may differ from the local governments. They may differ from the entrepreneurs. But the uplifted confidence is very, very important. It's hard, but they will try to deliver something. And so we will see how successful they will. But I think it depends on who you ask. For general public, particularly in remote areas, those people just got rid of poverty, moved to the so-called common prosperity. They will be thrilled with the new development plan. But also, scientist communities will be encouraged in terms of a lot of opportunities for indigenous innovation, China's self-reliance. There's a lot of policy will come out. But also this is an opportunity for entrepreneurs. They may find some investment opportunities. So of course, it will not have immediate impact, but at the long term, puts China in a very good position vis-a-vis the Western-led so-called decoupling, so-called technological sanctions against China. So China wants to be very strong in this area. So this is dominant theme. This reflects Xi Jinping's so-called new development production and new quality of production. So that's very much emphasized technological innovation.
How confident are you that China will be able to develop its own in-house technological capabilities?
Well, look at the past 40 years. It is a miracle in some areas when China just got off the Cultural Revolution. China was so bad, so poor. I think the thing is why Western countries are concerned about China, not because China's weakness, because China's strength. In so many areas, one after another, China catch up. In the areas of material science, China is already leader, world leader. And if you look at the publication of Chinese scientists in the top journals like Science and Nature, you see Chinese from not existed, whether Chinese national or overseas Chinese. Now about 1/3 of the authors are Chinese with the Chinese names in the Nature magazine. That tell you about how quickly China moved to one of the top countries in scientific development. Of course, China in certain areas like chips, like biotechnology, still lag behind, and the Western-led, US-led containment or sanctions against China, so-called relocation, decoupling, certainly hurt China. But inevitably, this will only make China refocus on innovation. Does not mean that China don't want to collaborate with the outside world, especially with the United States, but China is forced by this kind of decoupling, so they need to produce their own top scientists with new firms, new emphasis, new energies, and etc. Now, in EV and in aerospace development, you already see some very important developments.
Dan, I'll give you the last word. Obviously, this is a long-term picture that Li Cheng has painted. Let's look at just the second half and what the rest of the year is looking like to you as we get closer to, of course, that U.S. election risk, tariff risk, the like as well.
We still expect the export to hold up, judging by the demand situation in Europe and the U.S. They could be strong enough. But for the domestic economy, I see very little signs from the central government or central bank to really do more stimulus. And at this point, actually, the government should have tried whatever they can to generate some inflation so that it can discourage people from hoarding money. But the monetary policy is too much concerned about stabilizing RMB rather than stimulating domestic economy, so it's kind of in this stagnation. And then the only option left is some sort of massive deficit financed large projects. And right now, it's hard to see what this kind of project is. Maybe think about what happened in 1930s in the U.S. Their economy was in deep trouble, but then the biggest deficit finance projects was World War II, and then that essentially put the U.S. out of that big mess. But for China, a project like that is hard to come by. Maybe the Belt and Road, maybe something else, but the number one priority is still the government needs to secure more tax revenue. And I am quite anxious to see what they will announce this week.